young executive here in the city, you cannot afford a rent of 100,000 dirham or more. You're looking to rent a property with some roommates, and this has become an issue recently with shared accommodations, and there needs to be areas or units or buildings that can accommodate these type of individuals, and there is literally none.
How is short-term rental performance influencing investor decisions today?
So the short-term rental industry here is thriving for many reasons. Number one, the demand is very high. Supply is still very low considering the type of city that we're in and the number of tourists that we have coming here on a yearly basis and how it continues to grow. Also, we have the advantage here in Dubai, unlike other cities in the US or in Europe, where the short-term rental industry is very much strictly regulated now. As an investor here in short-term rentals, it's a very good option, and you're looking at double-digit returns.
Okay, let's be real. If you've been living in Dubai for more than, say, 7 minutes, you've probably heard at least 3 different takes on the property market this week. 1 minute, your taxi driver is telling you it's booming, and the next, your cousin's second aunt, once removed, is whispering about a bubble the size of the Burj Khalifa. And then there's that guy on LinkedIn aggressively posting about disruptive opportunities. It's enough to make you want to just buy a desert tent and call it a day. But what if we stop relying on whispers, Twitter gurus, and desperate agents and start listening to the actual data? Because while narratives in this city spin faster than a developer's marketing carousel, the numbers, my friends, are quietly telling a very different story. The Dubai real estate market has continued on a record-breaking path, with the first half of 2025 reaching new highs, representing a 40% year-on-year increase in sales value. 40%. That's not just a boom, that's the market doing a full-on victory lap. And the luxury market? Oh, it's not just booming, it's stratospheric, benefiting from an influx of wealthy expats who apparently decided their old homes just didn't have enough bathrooms. We are talking record sales of homes valued above 10 million US dollars. Forget your starter homes, these are starter empires. Today, we are cutting past the noise, the hype, and the sheer audacity of some developer brochures. We are digging into what's actually moving this market. Who's buying, where they're putting their money, and why it matters now more than ever. This is Real Deal Dubai, and yes, we have graphs. So many graphs. Alright, let's grab our metaphorical magnifying glasses and check on what the numbers are actually telling us this quarter. Because if you're not looking at the data, you're just guessing. And in real estate, guessing can leave you more financially bruised than a camel after a particularly spirited karaoke night. Dubai registered over 36,000 real estate transactions in the second quarter. Let that sink in. 36,000. And the first half of 2025 recorded a grand total of 98,603 property sales. To put that in perspective, that's almost 100,000 sales in 6 months. That's a new transaction every 2 minutes and 40 seconds. Someone somewhere bought a property while you were deciding what to have for breakfast. Second quarter of 2025 saw its strongest ever quarterly performance with 53,118 transactions worth a mind-boggling 184 billion dirhams. This second quarter sales value was 25% higher than the previous peak in the fourth quarter of 2024, and transaction volume up 5.39% above the third quarter last year. So, if anyone tells you things are slowing down, just show them these numbers. Then watch them awkwardly pivot to discussing the weather. Now this is interesting. Overall, first sales from developers significantly outnumbered resales in the secondary market, accounting for 66% of both volume and value. Because why buy something used when you can buy something off-plan that doesn't even exist yet, right? But hold on, the secondary market is indeed waking up. Resale transactions accounted for 39.2% of the market in April. So people are finally getting around to selling those units they bought way back in fourth quarter last year. Good for them. Meanwhile, average rental yields have stayed strong across the board. In fact, in some communities like Arja and International City, they've climbed past 7%. So, if you're a landlord, you're basically printing money or at least converting it into high-end coffee or gold tea rather. What about prices? Average property prices posted strong growth, rising 1.97% in April 2025 to 1,565 dirhams per square foot. This stands 26.9% above the previous market peak in September 2014. Yes, the market has officially done the financial equivalent of hitting the gym, getting a glow up, and telling its 2014 self, "Look at me now, loser." Average villa prices have risen by nearly 24% year on year and by 30.3% since the first quarter of 2021. Apartments are close behind, with prices up 21% year on year and 21.4% since 2021's first quarter. The median price in the second quarter of 2025 was 1,607 dirhams per square foot, significantly up from 958 dirhams in 2021. Rental rates have also surged, with villa rents up by 5.1% and apartment rents rising by 10%. If your rent hasn't gone up, congratulations! You've either found a unicorn or your landlord genuinely forgot about you. This isn't just a bubble waiting to pop. It's a recalibration, an evolution. It's being driven by informed choices, not solely by the fever dreams of speculators. The market is in its 54th month of expansion, displaying remarkable resilience. Though, like a very fit person hitting their mid-40s, signs of maturity are definitely becoming apparent. The market isn't young and reckless anymore. It's got a mortgage and a preference for early nights. So, you've seen the numbers. They are big. They are impressive. They're probably making some real estate agents spontaneously combust with glee. But let's look deeper and beyond the brochure into what all this actually means for everyday buyers. Because today, buying property in Dubai isn't just about catching a market wave. It's about aligning purchase with a very specific, often surprisingly practical purpose. Gone are the days when people bought solely because it looked shiny on the rendering. Now, they want to know if there is a nursery school nearby. Yes, a nursery school. Who's leading the demand? It's not just foreign investors or cash-rich buyers from overseas looking for a convenient tax haven. Though, let's be clear, they are definitely still here, probably buying entire floors with loose change. But UAE residents, young professionals, and families are a significant driving force, often with roots here. They've decided Dubai isn't just a layover, it's home. And they need more than just a view of the world's tallest building. Approximately 90,000 new residents arrived in Dubai in the first quarter of 2025 alone, reaching a population of 3.94 million. That's like adding a small city to Dubai every 3 months. This growing population is a key factor sustaining pressure on the residential property market. More people means more people needing places to sleep that aren't airport benches. These discerning buyers, these new informed consumers of real estate are looking at projects with actual amenities, decent locations, and proximity to public transport. They prioritize schools, green spaces, walkability, and long-term livability. Areas like Jumeirah Village Circle or the JVC, Business Bay, Dubai Hills Estate, Dubai South, and Motor City are becoming lifestyle-driven destinations and are among the top-performing areas. The artificial island of Palm Jumeirah also remains one of the most popular locations for luxury transactions. Because even if you want a practical life, sometimes you just need to live on a giant palm tree in the ocean. It's a classic human conundrum. We are seeing more buyers choosing townhouses over downtown towers. Because as it turns out, having a tiny patch of grass for your kids is suddenly more appealing than the 70th floor. More people are asking about service charges than skyline views, which, let me tell you, is a phenomenal shift. So the question isn't, where are the prices headed? The question is, where are people headed and why? Because that's what will shape this city for the next decade. And frankly, it's far more interesting than arguing about the latest skyscraper render. Well, it's always good to have some unfiltered data, and it would work out even better when it is spitted out to you by an expert here. And we have with us a person who has been in the industry for 20, 30 years, and wow, she is known as the data queen. She is also the founder and CEO of Real Trust, Ms. Lynnette Sacchetto. Thank you so much for joining us today.
Thank you for having me.
My first question to you will definitely start with data. I mean, you've been talking about data on LinkedIn, and do you really feel that there needs to be 3 metrics that every person needs to personally track to understand the real pulse of the Dubai property market?
Well, I would say it's much more than 3 metrics. There's several things, and it also depends on what type of investor you are. Are you looking to long-term perspective? Are you looking for just pure ROI? Are you looking for ROI and capital appreciation? Are you looking to retire, second home? So depends on what you're looking for, but overall, high level, it is essential that you understand the type of property that you want to buy in the area that you want to buy, and you know the amount of supply that's coming up in that particular area. So that would be my number 1 metric that I would look at, because there's a lot of units currently under construction today. There's a lot of supply coming into the market over the next 4 years. And this could have an impact, could be good, could be bad, depending on the community and the type of property that you pick. And of course, the other metric is to see the type of, I would say, from a data perspective, looking at the difference over the last 5 years of where rents have moved as well as where capital appreciation has moved within an area. And then, of course, you have population growth. So where is the population moving to? Are they moving to the suburbs? Are they moving closer to the city, closer to the sea, moving down south where the new airport is going to be? So these are, I would say, the top 3 that I would look at.
Do you think that there is too much attention that's being given to the luxury market while affordable segments are still underdeveloped?
We're constantly seeing reports of, the top ultra high net worth individuals are coming from the UK, from Singapore, from US, which is true. They are migrating to this part of the world, and they are looking for luxury properties, apartments, and villas. And we are underserved in that market. So there is much growth left there. When it comes to affordable units, there's high demand and pretty much zero supply. When you look at what is affordable units, especially, for example, if you're a young executive here in the city, you cannot afford a rent of 100,000 dirham or more. You're looking to rent a property with some roommates, and this has become an issue recently with shared accommodations, and there needs to be areas or units or buildings that can accommodate these type of individuals, and there is literally none. So shortage, no, none. So that area definitely needs to be addressed.
That's actually pretty interesting. But before that, you did talk about the rental index as well. So when you look at the rental data or the short-term rental data and its global standards, how would you be vocalizing that? And how is short-term rental performance influencing investor decisions today?
So the short-term rental industry here is thriving for many reasons. Number one, the demand is very high. Supply is still very low considering the type of city that we're in and the number of tourists that we have coming here on a yearly basis and how it continues to grow. Also, we have the advantage here in Dubai, unlike other cities in the US or in Europe, where the short-term rental industry is very much strictly regulated now. In some cities, there's no more licensing for short-term rentals because it's become an issue. I'm sure you've seen in the news with Spain and Italy and in some places in the US. So as an investor here in short-term rentals, it's a very good option. And you're looking at double-digit returns.
I mean, you're talking about digits, you're talking about data, which is all very powerful. What does using data correctly really mean? Because in practical terms, does a buyer really evaluate data while buying a property?
No. No, because number one, there isn't really good places for a consumer to go to look for data. Yes, you have it on Property Finder and you have it on Bayut, which are the real estate portals here. But really, I would advise investors and users looking to buy here in Dubai to work with a real estate agent who is very data-centric, who understands the market, looks at the data on a daily basis, and can properly educate you on the market using data.
The existing property websites, do they really give you enough data for a first-time buyer?
I worked at Property Finder for 4 years, and I was on the data team. Issue, if you want to put it that way, is that if you put too much data out for the consumer, they get confused and they don't know what to do and they stop. So you have to kind of drip feed little points of data here and there. So for property portals, how they do it is perfect. But if you are a seasoned investor or you're very data centric and you want to drill down into the numbers, there really isn't a place for them to go to find that information. But the information that you get on the property portals for, like you said, a first-time investor is enough. I mean, you're going to see yields, you're going to see growth, you're going to see demand, basic things. But there's a lot more than that you need to look at. Like I said, for example, supply, when you're looking to buy a property here.
So is the off-plan market becoming a gamble then, or is it the smartest plan so far?
You have to be very careful. So there's a lot of saturation in the off-plan market, especially for studios and one-bedrooms. I would stay away from that if you haven't already purchased that. There's a low supply of villas and townhouses. I would look towards that direction in the off-plan market, or for 3 bedrooms, for example, which you can't really find that much in the off-plan market. Also, look at the areas that are overly saturated for the amount of supply. Stay away from the buildings that have 2,000 units in them within the same, community, for example. These are the kind of things that you need to look at with off-plan. Yes, you do need to be much more careful these days when buying off-plan.
So what happens to developer loyalty then? Especially, would you say that the developer loyalty is driving pricing today? And is it time for buyers to become more ruthless?
Very interesting. So Emaar launched Rosewood today. There's a queue. I have, people, I'm not an agent and people are calling me, asking me for properties. So they just think that because I've been here long enough and I know people in Emaar, I can accommodate them. So that's the consumer loyalty that will always be there for developers, for example, like Emaar. Should they get more ruthless? Unfortunately, they don't have the room because the only time the developers were negotiable was during COVID. That was the only time. Now there is no negotiating. You have to stick to their payment plans. Yes, the number of months are negotiable. If you're buying bulk units, that's negotiable. But we're not there yet. But I do believe we will be there in the next 18 to 24 months.
On LinkedIn, you discussed average price indices you helped launch. And how has having access to the first official housing price index changed stakeholder behavior in Dubai?
So that was one initiative that led to a few others. So that was Moasher, which is the first official house price index for the city of Dubai when I was at Property Finder with Dubai Land Department. That led to the Open Data API, which is what Property Finder, Bayut, and a few other prop techs are using today to give data to the public, whether it's B2B or B2C. This is significant because when I arrived here to Dubai in 2005, there was nothing. So there was no data, there was no data points. I was looking for apartment, and at that point the supply was low, demand was high, and you're just paying whatever the owner wanted. And at that point I knew, okay, we need to bring open data to the market because we need to educate the investors to bring more foreign direct investment into Dubai. So the Open Data API was a huge initiative because it launched many different data initiatives into the market that's accessible to people around the world.
You've highlighted that 40% of investors are non-residents. What are the top regulatory or financial obstacles they still face today?
So this is pain points and gaps that I've seen over the last decade, and I always wanted to tackle, but never had a chance to until over a year ago when I started Real Trust. Foreign investors, non-residents who don't have UAE bank accounts, how do they buy property here, or how do they sell property here without a manager's check? So before, they were using unlicensed third parties, they were sending funds to the real estate agents or to the real estate brokerages, which is not allowed. So third-party fund transfers is against UAE central bank regulation. And I launched Real Trust to accommodate the foreign investors in a secure, transparent, and easy way to move their funds in a licensed and regulated manner, and offering them that transparency within the legal framework of the real estate transaction, because we handle all of that as well on the back end, and to help them to purchase or sell their property here.
Are Dubai's property prices being inflated by, say, marketing more than actual value?
No. So they've been inflated by a few things. So I wouldn't say inflated. What has caused the Dubai property market to boom actually has happened since COVID. So in COVID, we had just a downturn of 2 months. I believe it was like June and July.
Right.
Then we had a significant V-shaped recovery. And that was due to the amount of foreign investors coming here as a safe haven from their countries, from the restrictions and lockdowns, where it was much lighter here, because we did such a good job to contain everything. And they saw this city that they never thought to visit, they never thought to invest in. And these are investors that were not common at that point: French, Spanish, Italian, American, Canadian, Australian. And they came here and they started to purchase. Extremely affordable, much more affordable than their home countries. Also at this time, we had a lot of crypto buyers come into the market. That was like in 2021. And then the Russian-Ukraine conflict happened. Correct. And then we had a lot of those individuals come here. So that's kind of what has caused the boom in the property market. And now really it's the ultra high net worth individuals that are moving here.
Which are the areas that you would say are oversaturated at this point in time, and we really need not look at those kind of communities or properties there?
So I would say JVC will be in my top list there. Even though it's very popular, you have high ROI. There's 36,000 units in JVC. There's 30,000 under construction.
Wow.
So infrastructure road-wise, it's not very easy to maneuver within JVC. It already is crowded and congested. So I would say that would probably be one of my top areas.
My final question to you. You've built Real Trust UAE to champion transparency and trust. What is one data transparency issue Dubai's market still needs to address?
I would say just opening up more data points. So for example, nationalities, age groups. This is very important, especially for people who are trying to serve these people coming into the market. So if you're a real estate agent and you focus within, like for example, Spain, it's important to know where is Spain in the top 10. Same thing with age groups. We're starting to see a younger generation come here. I believe not millennial, but the one after that. I don't know what generation that is, but I'm a few back from there.
Gen X, Gen Y, Gen Z, too many things to it.
I would say opening up a little bit more data points, a little bit more granular data would be amazing. But to be honest, the amount of data that we have in the market right now is really good.
Thank you so much, Lynnette. Thanks a lot for joining us. And
Thank you
don't go
me.
anywhere. Stay real. We will be back with more data points. And now for a segment we call Buy or Buy, where we take a real listing and give it the reality check it deserves. This week features a listing of a one-bedroom apartment in Dubai Hills Estate priced at 1.9 million dirhams. On paper, it looks like a small entry point for first-time buyers. The kind of place that whispers responsible adulting in your ear. Here's the quick breakdown. 757 square feet, so not a broom closet, but also not a palace. It's a good, solid apartment developed by the Emaar Group, the titans of Dubai real estate. Price per square foot around 1,450 dirhams, which is close to the current average property price of 1,565 dirhams per square foot in April 2025. Rental potential 85 to 90,000 annually. For perspective, the average asking rent for a one-bedroom apartment in Dubai stands at 90,000 dirhams. So, it's hitting the sweet spot for rental income. Estimated ROI 6.8%, which aligns with the more realistic 10 to 12% returns now expected in the market. Look, it's not going to make you an overnight billionaire, but it's not going to make you cry into your investment portfolio either. What stands out here is the developer reputation and the overall quality of community infrastructure. Service charges are reasonable, rental demand is steady, and it holds its value well. Is it underpriced? Not really. Is it solid? Absolutely. If you're looking for stability, this might be worth shortlisting. If you're looking for a fish in the pan, speculative frenzy, this is probably not for you. Go find a crypto bro. So here's the cold, hard, data-backed truth of what we learned today. Dubai's market isn't bubbling, it's broadening and maturing. It's less like a high-stakes poker game and more like a carefully diversified investment portfolio. It's not just about premium views or quick flips anymore. It's about lifestyle, strategy, and understanding your long-term goals. Unless your long-term goal is to own 15 unrented apartments, then maybe reevaluate. The market continues to display remarkable resilience, driven by diverse demand sources and broad-based investor confidence. Demand for housing has reached peak levels, buoyed by new arrivals and the desire for luxury living by high net worth individuals. The government's strong economy and attractive relocation climate mean Dubai will remain a magnet for international talent, with demand projected to significantly outstrip supply in the years ahead. We are talking about a situation where supply will not be sufficient to meet demand until possibly 2028. So if you're waiting for prices to magically drop because of too much supply, you might be waiting for a while, possibly until 2029. However, and this is important, the market faces risks because nothing, not even Dubai real estate, is perfectly invincible. Global market uncertainties, potential impacts from falling oil prices, and the effect of tariffs on construction supply chains, these are all lurking in the shadows. Sentiment also needs to be closely watched, because if enough people think something is going wrong, it can become a self-fulfilling prophecy. Yet, the market's capacity to absorb record volumes of off-plan launches, especially in the villa segment, remains a key strength. Because again, people really want those villas. That brings us to the end of the show. Thank you for watching The Real Deal Dubai. We'll see you next week with another episode of Facts Over Flash. Until then, this is Pratiba Raman, and you stay smart, stay curious, and always, always, always read the fine print. And maybe, just maybe, question what your taxi driver tells you, unless he's also an accredited real estate agent with full data analytics dashboard.